Romeo Razzi CPA here. I used to work at the IRS, and one of the things that people ask me all the time is how long should I hold on to tax records? So I'm gonna go over all the things you need to know regarding holding tax documents. We're gonna go over how long to hold them, how long does the IRS have to audit you, because that's the crux of why you're holding on to your tax records for so long. Is the IRS ever gonna come after you, and what you need to have ready in case you get audited? Which documents should you hold on to, and which documents should you never, ever get rid of? Okay, let's get started. How long you hold your tax records is based on whether or not the IRS is gonna come and audit you. In most cases, the IRS can go back up to 3 years to audit you. That's the statute of limitations for them to audit you. In most cases, it's 3 years. However, if you underreport your income by more than 25%, they can go back 6 years. And that's the reason why most CPAs and tax preparers always tell you to hold your tax records going back 7 years. I recently had a client in which they got a correspondence audit because they had a 1099 that was issued to their social security number instead of their LLC. So now we have to go back, and this is only a couple years, so it's within the statute, and go through all of his tax documents for that year and try to tie everything out and show the IRS that that 1099 was actually meant to go to his LLC and not him, so he doesn't get taxed twice on the same income. The type of documents that you should hold on to are obviously a copy of your tax return, the work papers that come with your tax return, and any type of information returns you get. An information return are things like W-2s from your job, 1099s if you're a contractor, 1099 brokerage statements from trading stocks. If you're an investor or a partner in a business, your K-1s, and any other documents that you give your CPA in order to help you prepare your tax return. So mortgage interest statements, if you had a lot of medical expenses, all those receipts, any charitable contributions, any of the letters you get regarding that, all of those kind of documents you need to hold on to for 7 years. Now you're probably asking, what if I suck at holding documents? Like, what if I'm really unorganized when it comes to keeping documents around? What you need to do if you're unorganized and you're not good at keeping documents is you need to make sure that the CPA firm or tax preparer firm you're working with is a paperless firm. For instance, I have a paperless tax firm practice. And so every single tax document that my clients give me, I use a scanner, I scan into my private secure cloud, and I keep them there for 7 years. And some of my clients, when I give them back the source documents, they choose to go shred them and have me send them copies of all the documents in PDF form, so that way they can keep an electronic copy of it. But in either case, as a practice, I keep all my clients' tax records for 7 years, and you should too. Now, there are certain documents that you should never ever throw away. And those are documents that have to do with if you're doing a transaction and there's like a long period of time in which this transaction occurs. Now, let me give you an example. Imagine you buy an investment property and you buy that investment property 10 years ago and you decide to sell it last year. It is important that you have a copy of your settlement statement from when you purchased the property 10 years ago. And it's really important to keep those kind of documents in states that are called non-disclosure states. A non-disclosure state is a state in which you cannot find out the history of purchasing the property. Two of the states I know that are non-disclosure states are the state of Texas and the state of Idaho. If you go on Zillow or Realtor.com and you try to look up the purchase history in Texas or in Idaho, it comes up blank because it's a non-disclosure state. There was once an IRS court case in which somebody had sold a property and didn't have the original settlement statement. And they claimed that they purchased it for some amount of money. I forget what it was. They said they bought it for like $400,000 and they sold the property for like $1 million, and that they should only pay tax on $600,000. Well, the IRS agent made the assertion that if he cannot prove how much he purchased it for the purchase price for tax purposes is 0. And it went all the way up to tax court, and the tax court judge sided with the IRS, which means they know that you certainly bought this piece of property for something more than 0, but because he had no evidence of what he purchased it for, they sided with the IRS that we're just gonna put that your basis is 0. So settlement statements are really important that you hold on to. The second thing that you need to hold on to are gift tax returns, because you need to keep copies of your gift tax returns all the way up until the time you pass away. Because when someone files your estate tax return, they need to include all of the gift tax returns as well. And then any other type of large purchase item where there's a sale. You have an expensive automobile you need to sell, and you're picking that up in income, or you're showing that you had a loss on it and you bought that vehicle many years ago. If you're doing leasehold improvements, anything that looks like it'll be permanent in nature for a very long time, those records are things that you need to keep as long as possible until you've disposed of those assets. And in the case of gift tax returns, you keep them forever. Also, the other thing besides gift tax returns, large transactions, and real estate settlement statements, if you create an NOL, which is a net operating loss, and that NOL goes back more than 7 years, you need to keep all your tax documents that show that NOL. Those are the things you need to make sure you always keep regarding your tax records. Settlement statements, gift tax returns, large purchases, any tax returns that show NOLs going back more than 7 years. Those are the things that you should keep. Now, I have a client right now. She is moving from Vegas to another state. And she called me on the phone and she was asking me which documents should she keep. And she has boxes and boxes and boxes of tax records that go back about 20 years. And I told her anything that has to do with trusts, anything with gift tax, and she's heavily invested in real estate and notes. I said any type of documents that show the purchase of those real estate going back 20 years, you need to keep all that stuff. If you aren't sure of which documents you should or shouldn't keep, you should contact your CPA and ask them, and they'll let you know which documents you should or shouldn't keep. Now, if you accidentally lose some of these documents, there are some things you can do, all right? Let's say you're being audited and it's within the 3-year statute. Well, one of the things you can do is you can go ahead and get copies of your IRS transcript. They will show you those documents. The other thing you can do is you can try to go back to wherever it is that the IRS is trying to make an argument against you and try to get those documents. For instance, let's say you purchased a car 7 years ago. It's possible you can go to the dealership and they may have a copy of your original purchase. If you need a copy of your settlement statement, if it's possible that you go to the title company, if you're using the same title company, they may have records of it. Those are things you can do if you lose copies. And once again, ask your CPA. Most of them are paperless, and like I do, they scan everything in so that way they don't have paper copies. Now you know what you need to hold on to. You should hold on to your tax records for about 7 years. If there's something you're not sure of, check with your CPA. Remember, the IRS in most cases can only audit you going back 3 years. In some very rare cases, they can go back 6. And I hope this was really, really helpful for you in knowing which documents you need to hold on to and how long you need to hold on to your tax records.